Is the bear market upon us? Markets are plunging. People are debating online whether the cycle's over. And at the moment, it looks like the bears are calling right. But is that the case? Is it a bear market? I mean, technically, look at the charts. Yes, it's a bear market. But there's something not quite right. We've missed out on euphoria, even thrill. We've had no alt season. And without that euphoria, it feels like the cycle incomplete. Yes, we've reached Q4 of a post-halving and election year, but does that mean that the cycle is over? Well, in this video, we're going to go through some charts, facts, and we're going to try and get to the bottom of that. So if that sounds good to you, come and join us. Doesn't look good, does it, people? It's red across the markets. It's not just been red this week, red last week, and the rest of the month. And it's all been since that massive liquidation event that day, October the 10th. We'll all remember that date where 20 billion or more was liquidated from the crypto markets in just a few hours. And we look at the crypto markets right now, Bitcoin sitting there at 82,000, and it's been lower today. And Ethereum at 2,690, BNB down to 800. Solana down at 124, Sui at 134. These prices, you can get fearful about these prices, but should you be fearful, or should you be using this as an opportunity? As they say, bears sound smart, bulls make money. Okay, and that's what you got to remember. So they might sound smart at the moment, especially the ones who are short in the market. For the bears who are shorting, it's like for the bulls, a parabolic run up and we're taking profits, it's their time. This is the bears' moment and we can't fade that, okay? We've got to understand that, yes, technically at the moment, this is a bear market. But is it a cyclical bear market, or is it a temporary bear market, or a bear trap as part of the bigger cycle, the bigger picture? And you know me, I'm not a trader. I'm an investor. Okay, I'm invested in technology that I think is going to do well, that it's going to get adoption, and I believe that eventually it gets its upside. Now, I watch the trends, I watch the charts, and I'm not blind. I can see that certain levels have been lost. I can see that certain EMAs and moving averages have been lost. I can see trends breaking. I'm not blind to that. But what I want to understand and what I want to help you to understand is this cycle over, or is this a blip, a bump in the road? Well, let's find out, okay? We're starting off just looking at Bitcoin on the 4 hour, okay? It's been as low as around 80,000 today. I believe I saw it as 79,000 on certain charts. This trend has just been parabolic to the downside, okay? But it is hitting some low RSI levels, potentially might get a bounce in the short term. What we want to know is, does that bounce in the short term become a more longer term bounce? Does that then take us to a lower high, a complacency bounce, or does the bull market continue? Many would say, and the argument on their side, technically, when looking at charts, would say that any bounce is going to be complacency. But I'm seeing some other things, and we're going to get to that as we go through the show. So fear and greed now at 14. It's been extreme fear for, the last month, as we can see. We've had some of the longest spells of extreme fear that we've ever seen. Lower readings where we got down to around, I think it was around 10 at one point, or slightly lower, 9. Some of these readings have not been seen since, the FTX collapse in the last cycle. We've had over 2.1 billion liquidated from the markets today, okay, in the last 24 hours. That's a huge amount. It's not quite 20 billion on that mass liquidation day, but this is above average liquidations, particularly on the long side at 1.9 billion. The shorts have only seen 200 million taken in the last 24 hours. But it's not just today. This has been around 500 million to 1 billion on average most days for the most part of the past couple of weeks. And it does make you feel, and there are some of the biggest days of short liquidations were only up in the 400 million, and there were very few of those days. Okay, this has been mass long liquidations, wiping them out. It's surprising that anyone is still long, at this level. Just in, Bitcoin realized losses just spiked to levels last seen during the FTX collapse. As we can see here, this was the FTX lows, yeah? This is how much Bitcoin holders were in realized losses, okay? Look at this spike. But let's remember, when those realized losses were at its highest back in 2022, okay, this was an excellent time to buy. Okay, I know we've been in a bull market, and I know it's Q4 of the post-halving year, but is it a good time to buy? I mean, these were higher realized losses. Okay, these were okay times to buy. This was a good time to buy. Okay, it's so it is this a sign that it could be a buy the dip opportunity. This is not financial advice, by the way. I don't give financial advice on this channel. I don't know whether we're going lower or whether we're going higher. I'm just telling a story of my investment journey and basically blogging it, okay, on this YouTube channel. And I believe that we are still in a bull market, but this is a very deep correction, and it's a potential bear trap. Take out the weak hands before we get the next leg up in this cycle, and it could take time. It could take weeks, it could take months. I don't see us being in a cyclical bear market for a number of reasons, for fundamental reasons, economics reasons, and other cyclical things that are outside of the crypto 4-year cycle. Everyone's always talking about the crypto 4-year cycle like it should always take place as it has done in the past. Let's remember that Bitcoin and crypto, it's a young asset class, okay? But there's another reason why in the near term we are seeing a lot of downside pressure, okay? And here's Tom Lee. He's going to explain a bit about that for you now.
I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. on a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
So Tom Lee didn't quite want to say who was possibly behind all of this. But I've seen Wintermute's name flying about a lot, actually. I saw their name being mentioned, actually, around the day of the October the 10th crash, okay? And they're coming up on this list here from Tracer, yeah? Wintermute selling Bitcoin, BlackRock, Grayscale, Coinbase, Binance. I'm less interested in BlackRock and Grayscale because that's more on the ETF side. As I'll show you in a second, they are like the most emotional retail traders, okay? They sell the lows and they buy the highs, okay? But I'm more interested in the market makers, okay? And that's not just a company like Wintermute. That's also Coinbase and Binance. This between the three of them, probably the deepest amount of liquidity in crypto, okay? And that means they've got capital to sell and they've got capital to buy, okay? And when they was in that liquidation event, okay, a lot of things unwound, okay? And it's still unwinding now because they're trying to recuperate their losses, okay? In whichever ways they're doing that, they could be max short and driving it down, okay? Building their longs ready for the next move, okay? Liquidating, many retail traders, many institutional traders as well, getting liquidated on their platforms. This is building them up reserves of billions, okay? And if they lost billions in reserves, okay, due to what happened on October the 10th, they need to build it back up again, okay? And they're building it back up by taking us down very low, or they take us up very high. That's what I believe anyway. Okay, over 10 billion of Bitcoin was dumped, pushing it to 82,000. As we've seen, I think it's gone a bit lower today. Maybe 79,000 was the lowest. This is pure manipulation. Is it? Maybe it is. It's their business. This is their business model. Okay, so they need to. They've had a mistake. Something's gone wrong, and they need to recuperate their losses. And they will do that at the cost of all of the retail and institutional traders that are long and short. And they're taking it down to the long side first. They're taking it down. They're wiping out as many longs. They're going to want to make the most out of this cycle. If this cycle carries on, like I believe it will, they're going to want to take the maximum amount of liquidity to the long side, down to the downside. And then when they rise up, they're going to take all of the shorts, okay? And that's the way the market works, okay? So, it's a bit out of the ordinary, this type of dump. But is it really? And we're going to take a look right now, okay? But before we look at the charts, okay, a couple of other things to mention, okay? First of all, I saw this from Wintermute, okay? This is their intern. I'm not sure how legitimate this page is, but it seems like a bit of a message to everyone. Zoom out, because they're getting a lot of mud slung at them right now. So I think they're putting out some messages, okay? So how do you have an edge if you aren't actually a genius? Okay, zoom out from the game, yeah? You win by selecting to only play games that you have an edge in and surviving. In practical terms, whether the market has already topped or if it's just a bear trap, FYI, the biggest that I've ever seen. but also they won't trap me. It's surprisingly not important at all. What is of utmost importance is that you survive, come what may. And I think that simply involves having enough runway banked up so that you are never forced to sell early or forced to participate in EV Hunger Games that you have no edge in. A portfolio of just cash and crypto, if sized correctly, will allow one to stay retarded and alive longer than most others can stay solvent. That is my fortress of fucking solitude. Okay? So, few little messages in there, I think. Okay? Are they saying they don't know whether the market's topped or if it's just a bear trap? Okay? And they're saying that they're not going to get caught. Okay? And they're also saying about having enough runway banked up, okay? Having cash and crypto, okay? So come what may, okay? You are able to adapt to that situation. And if that means that prices are dropping low, you have the cash to accumulate, okay? Whether that means that you've got cash on the sidelines or whether your runway is just simply having a job and a living and able to accumulate and DCA over time, okay? And just having some crypto as well, because exiting the market is another way to lose, okay? Always good, if you want to win, you've always got to have the ability to buy more. And if you want to have the ability to stay in the market to capitalize on those gains, you've got to be in the markets. You've got to have something there, okay? Selling lows is never a good idea, just as it's not a great idea to buy absolute highs either. And that's exactly what the ETFs do. Okay, as we see, they sell these lows. They've been selling hard into these lows. Okay, but they was buying at the all-time high. Okay, and you can see that all across. Some of these dips we had, like earlier this year. Okay, they was selling a lot around into those lows. Okay, but just before that, they was happy to buy the highs. I mean, look at this. Like this was back in end of 2024. You can see almost like an M shape there. Okay, they bought this high, sold this lows, bought the highs again. Okay, and you can see that right through. As for rate cuts, okay, so the bears have been jumping up and down saying rate cuts have been cancelled. It's not happening. This is the signs of the end of the cycle and everything like that. But when you know about central banks cutting and hiking, etc., they don't tend to switch from one to the other quickly. Okay, it happens over time. Okay, so regardless, if we didn't get a rate cut in December, I would say it's just a hold up because chances are they'll pause, maybe get into next year. Don't forget, Trump's going to replace the Fed chair Jerome Powell with someone more favourable for his plans. Okay, but on the other side of that, okay, we went as low as 22% chance of a rate cut to today we're back up at 63% chance of a rate cut. Okay, that's because we've had some economic data come out this week about jobs and employment, and it's looking pretty positive. Okay, it's looking like the economy is stable, employment is stable. Okay, and inflation's not going through the roof. It's creeping up little bits, but it's not as high as we've seen in the past. Okay, and unemployment's not at extremely high levels either. Okay, so maybe the economy is kind of stable. Okay, and don't forget the Fed are ending QT on the 1st of December. Okay, it doesn't mean we're jumping into QE straight away, but we will start to see forms of QE that are not quite QE, and in ways increasing their liquidity in the markets. Don't forget, we've still got bullish things to come for this cycle for crypto. We've got the Digital Asset Market Clarity Act. Okay, this should be signed into law early next year. Okay, along with that, with institutions still accumulating digital assets, mainly the big ones, the ones that are getting the ETFs, and there's more ETFs coming. We've had, in this downturn, we saw the launch of the Solana ETF, XRP ETF, and a few others. Okay, we're going to have staking ETFs for Ethereum. I think BlackRock's looking to do that. So there's a lot of bullish catalysts still going on. All the real world asset stuff still going on. Okay, stable coins are still becoming a massive thing. Okay, don't forget the American government loves stable coins. Why do they love stable coins? Because they buy US debt through bonds. Okay, so they're going to want this industry do well. Everything that Trump says about wanting to make America the crypto capital of the world, there may be ulterior motives for that. You know, it could be that they want stablecoins to force in, you know, a digital currency. Regardless, it's still going to drive these markets on. I believe that we are in a technology super cycle with AI and crypto. Okay, and I know you're probably feeling like AI has seen the better side of it and crypto hasn't, but these markets can change. Okay, it's easy to kick a dog when it's down. Okay, you know, there's a lot of people online at the moment saying, you know, crypto really was a scam and everything. How is it a scam? Okay, it's an industry. Okay, it's just hard for some people to believe that, you know, this funny internet money can make an industry, but there's a whole industry with thousands of people working behind the scenes in this. Okay, there's investors with billions invested in this space. Okay, you know, it's only going to take a little change of the wind and a change of the narrative. Okay, you watch. I mean, if crypto got a bounce right now, okay, and got some, you know, a few weekly green candles, you'll be surprised at how bullish people will get. Okay, and very quickly at that. Okay, and numbers only got to go up quite fast for a little bit, and all of a sudden you'll have retail interest as well. All these things that you wished you'd seen in the cycle so far could be a dream come true in the near future. Okay, and whether that's into early next year or not, I don't know, but the signs are there telling me that it could be the case, and those signs are sort of telling me that I don't think this is your typical 4-year cycle. Okay, and we're going to get further into that very soon, but I don't believe it's a cyclical bear market because of what's going on, both with economics and fundamentals. Technicals look awful. Yes, I know. We're going to get into those as well right now. Okay, so Bitcoin had another death cross. Okay, just here, there's the death cross, the recent one. Okay, but as we know, death crosses have been calling the lows for the last 3 major corrections. Okay, there we go. Back in April 25. Okay, called the low. Okay, there we are back in August, called the low. Sometimes they'll hit a little bit before the low, sometimes a little bit after, sometimes bang on. But you can go back in history that there was one called a low. They can come sometimes before, sometimes afterwards. Now they can also call a bear market. Okay, so then you have to add up to yourself, right? Okay, so death crosses, as long as you're in a bullish trend, okay, are usually falling lows. Okay, look, this one even in 2021. Okay, many people thought the market had topped. Many people thought that death cross was the end. Okay, I remember being there. I was there. I was in the markets for that, and it felt like it could have been over. But you know, there it was. It went higher. Okay, it didn't go a lot higher, but it did. Okay. So, you know, you can go back and check all of these. Okay, there's quite a bit choppy there back in 2020, 2021. Okay, but you know, is this death cross calling a low? We won't know. We won't know until it all plays out. Okay, now Bitcoin is down. Let's see from the high now. Okay, dragging it down. Okay, right, we're seeing a 35% correction. Okay, as Raoul says, 30% corrections in bull markets are normal. Okay, and let's also notice that we haven't taken out this low yet either, so it is technically still higher lows. Okay, but we do want to see a bounce from here soon. Okay, I don't want to see 78k taken out really, and I really don't want to see us coming down to here like this 69,000. I think it would. I think wouldn't expect that we would continue dropping to there immediately. If we were going down there, I believe we'll get some sort of climb back up, possibly up to around 100k, then that's where everyone's going to be saying, is it a complacency bounce or are we back on? And this debate's going to carry on for weeks and months. I can't see us breaking out into new all-time highs by the end of the year. So it's going to be a recovery over the coming months, I think. But yeah, and then we see where we go from there. Okay. Now we did also lose the 50-week EMA. Okay. Whether you want to look at moving average, SMA, simple moving averages, or you want to look at EMAs, exponential moving averages, I prefer EMAs. Okay. We have lost it, okay, and that was meant to be the signal, like, back here where we lost it, okay, and that was a bear market, okay, but don't forget, we also lost it temporarily back in summer of 2021, okay, we've also lost it, around March 2020 for COVID, and we lost it a couple of times in that point, okay. It's the fact that we are in Q4 of a post-halving election year that most people are saying this is a bear market signal. Okay, now the 21 EMA has not crossed the 50 yet, which is what we saw in 2021 to confirm the bear market. Okay, so that's something to watch out for as well. If these two can hold above each other, okay, now no doubt the 21 is going to come down towards this 50 as we recover, depending on how fast we recover and if we recover, obviously. So that's an important one to keep an eye on, the 21 crossed with a 50, okay? Yeah, I mean, like I say, it's going to take a lot to get back up there. I mean, you're talking about the 50-week EMA at the moment is sitting around 100k, okay? But we are at 85 now. We've been down as low as 80. So, that's a 5k recovery today, is it? Is that right? So we've got a 5k wick on our hands. Okay. So you want to see wicks at lows as well, if you're going to see a bounce. You want to see the stop of this continuous pushing down of candles. Okay. A good bounce will have a nice little wick. Okay. There we go. There was a bounce. Doesn't mean it can't come back down to the wick a little bit before moving on. This was a wick at a low. Yeah. This was a wick at a low. Okay, you want to see a wick as a bounce, okay, to see continuation, to move back up again. Then we've got one of my charts with the diagonal lines, okay. I get this method from W.D. Gann. He talks about angles and lines going diagonal through the charts, showing historical times where price has reacted off of these diagonals, okay. Because diagonals are an average of time and price. Okay, so we've come back down to this diagonal, okay, one that we first broke out of around December 2023, spent a bit of time hugging it, then broke away, come back down to it again in August 2024. Okay, don't forget this was like a resistance line in the bear market. Okay, there we go, April 23, June 23. We struggled around it before it collapsed further into the panic and anger of 2022. Okay, and now price is now looks like it's wick below the 100-week EMA. Okay, but the price is now starting to regain back above it. Okay, so could the 100-week EMA be showing us some support? We'll have to wait and see. Another one of my diagonal charts with lines set at a slightly different angle. Now, this one has come down below the line. This blue line here goes back to around 2015, okay, and before that, I believe. Okay, there we go. See, we first found it as support back in 2013. Okay, now it has wicked below it before, like it did back in 2015. Okay. And then it did come down to it. It held it a couple of times during the more recent bear market. And we are back here. Like, this is like bear market territory to be stuck on this blue line here, which shows, is the bottom in, or is it going to lose complete structure of these lines that are so historic going back, over a decade. Okay. That would be pretty naughty if it was going to, okay? I'm not saying it's impossible, Okay, but again, here it is on the 800-day EMA, yeah, which is pretty much the 100-week EMA. Okay, and you know, this is, you know, it's looking like a mess, isn't it? But what are these purple lines you're asking me? Is that what you're asking? What are these purple lines? Well, these are Mercury retrogrades, actually, and not a lot of people talk about this, but we're actually in a Mercury retrograde right now, and often we see lows around Mercury retrogrades. You know, sometimes there can be small little dips, like the last one we had. It didn't feel like a small little dip at that time. You know, we was up near all-time highs, and we were starting to roll over. You know, and you know, people got panicked there, even at the highs of this, what looks like a Wyckoff distribution pattern. Okay, looks like the distribution has played out. But what next? Do we see continuation, or do we see another Wyckoff pattern, which could be reaccumulation after decline? We'll have to wait and see. Okay. Now, yeah, I mean, there was all of these dips, a lot of these dips here on Mercury retrogrades. Okay, even from highs, you know, even or consolidation periods, you know, or we dip before the Mercury retrogrades. You know, it varies what stage of the cycle you're at. Look, these drop into it. So that was a bear market. So whether it's a bear market where you drop into Mercury retrogrades, okay, or whether it's a bull market and you take small dips into Mercury retrogrades, you know, some of these are small dips, but some of them are bigger dips. You know, this was a bigger one, okay, the April correction, okay, and then we've got, you know, the bottom of the March 2025 correction. You know, yeah, Mercury retrogrades often cause some sort of chaos in technology, and as we saw the other day with Cloudflare going down. Okay, many times it's been known that flights get cancelled and grounded because of technology issues at the airports, phone companies. Okay, losing 5G signal and everything like that. There's always some sort of issue around Mercury retrograde. But this one ends on the 29th of November, and many times, you know, price does not go much lower after the Mercury retrograde. Okay, so we might find ourselves into a low during the Mercury retrograde. Doesn't go too much lower. You know, sometimes it goes a little bit lower. You know, but you know, it could be. What I would say is with Mercury retrogrades, you can't trade around them. Don't start thinking you're going to do this and do that around them. But one thing is good, always have a bit of cash handy around a Mercury retrograde, because there's often a dip opportunity. And then we often see, you know, rises in between Mercury retrogrades. Okay. Rises. Okay. Rises. Yeah. Rises. Even if they go lower, rises. Okay. That happens in between Mercury retrogrades. During Mercury retrogrades, usually dipping into it, consolidation, you know, that's the type of thing that goes on. So I just thought I'd bring that to your attention. As I was saying about the Wyckoff distribution pattern, it's quite clear here. You know, Ted Pillow's lined it all out with all of the, you know, the schematic phases. Okay, I'm not a Wyckoff expert. I'm not going to pledge to be. Okay, but all I say is that these patterns leading to other patterns. So you can get the you can see this pattern forming, and you get confirmation of that move, and it can sometimes go into that bigger move. But here he is saying he called it back when it was Bitcoin was at like 95k. Okay, since then we've come down, you know, to the low 80s, like high 70s. So this pattern is confirmed as this was a correct Wyckoff pattern. Okay, now what's next? What's the next pattern? Because they're a pattern before leading into another trend. Okay, does not mean that it's cycle over. They are accumulation distribution patterns. So distribution can go to accumulation, and accumulation can go to distribution, reaccumulation, redistribution. It's just massive technical patterns and psychology. You know, so we'll see what happens with that. Now, this is one of Julian Bittle's charts, okay? This is Bitcoin, the 14-day RSI, okay? As you can see, each time we've reached these oversold levels, okay, a bottom was formed, okay? And we've hit it again now. So this could be, is it the bottom or is it a significant low? So we'll have to wait and see. But yeah, either way, we're probably going to get a bounce soon. Okay, so don't sell the lows. Okay, if you're getting fearful, wait for the relief rally, wait for the bounce. If it is a relief rally, it could be continuation of the bull. We're just about to go into one of my favorite subjects, okay, which is the ISM. Okay, I love cyclical indicators that span back for decades, that give us a lot of information and tell us where we could possibly go in, kind of like reading the tea leaves of the future, if you know what I mean. But before we get into this, we're going to watch a little clip of Raoul explaining the ISM and what's going on, okay? But before you do that, please click like, give us a follow, give us a subscribe, yeah? And join me as I keep journaling this crypto investment journey.
Then we've created this cyclicality. We had a perfect 4-year ISM cycle that changed. And it's driven, the cyclicality of the economy is driven by the debt maturity distribution. So the debts have to be rolled, and we need to, because going back to this chart, if you remember, we pay it by debasing currency. And so when the debts get rolled, currency debasement increases. And that is the process by which markets and economies have operated since. It's all the same cycle, and it happens globally. So up until 2024, we had this perfect 4-year cycle. I mean, perfect. And that was because the debt maturity of the debts after 2008 was 4 years. And then something changed. And we're like, what the fuck is going on here? We didn't really understand it until we went back to this and redid the maths and realized in 2022 and 21, when rates went back to zero, they extended the maturity of the debt from 4 years to 5 years, or 5 and a bit years. And so what that did was break this. We had this extra year in the middle that we never had before. The extra year in the middle didn't need peak refinancing. The refinancing is for this coming 12 months. So we haven't had peak refinancing. So you didn't get peak economic growth. Economic growth was held because we didn't get that stimulus. Rates remained higher because of it. And the cycle extended to this. And this is the 5.4 year sine wave. Now, we don't know what the next cycle is going to be, depending where all the debt maturity ends up. They're all sticking it in the short end right now. It might shorten it back down to 4 years. Don't know. We'll have to see, but this is what we're dealing with. And where we should end up is peak cycle is somewhere towards the end of 2026. This is the reason we don't believe in the 4-year Bitcoin cycle that's suddenly independent of the Nasdaq. They're all the same cycle. Or the ISM, it's all the same cycle. But suddenly some people online are like, well, it's all over now. We didn't get our rally in November and October. It's finished, all over. Let's come back again in 18 months' time.
Now, if you want to go and see more of what Raoul is saying, I suggest you go and follow him, Real Vision on YouTube and Raoul Journeyman. You get a lot of great information from Raoul. He really understands what's going on with these cycles, why the ISM does what it does. He can explain it far better than me. But one thing I do know is that this ISM is cyclical, okay? And I love cyclical indicators, showing us highs of 2021, lows of 2020, highs of 2017. You can go all the way back 2008 and beyond, okay? And this thing shows it. This is the longest it's ever been below 50, okay? And there's a good chance that as the economy starts to expand in the US, this will go up and it will show it. This is a really interesting that I want to show you, okay? So the ISM shows risk on times in the markets, okay? And what we're going to show now is when we get Bitcoin dominance, okay, which is a sign of risk on. So when Bitcoin dominance drops, it's a sign of very much risk on times in the markets. Now, if we overlay an inverted ISM on the Bitcoin dominance chart, what you can see here, okay, is when it dropped, okay, the ISM inverted dropped, which means the ISM was going up, which means there was risk on in the markets, okay? Same thing, yeah? So when it dropped, when Bitcoin dominance dropped, okay, the ISM was going up 2020, 21, yeah? Okay, as we can see, Bitcoin dominance has been going up So that means the ISM has been going down or staying low all of this time, okay? Now, it's not perfectly on time, okay? But you see a general picture of what I'm saying. We are not going to pinpoint this exact moment of risk on, okay? But what you will know is there will be a period of it, and that will be for the stock market as well, okay? Now, if we look at the Russell 2000, okay, as I've shown in previous videos, okay, after every US election, and we can go back absolutely decades, okay, there was an upturn in the markets. Even after 2008, the elections happened in 2008, the markets went up, okay? 2012 went up, 2016 went up, and 2021 went up, okay? Now, this is still going up, okay? This is the Russell 2000 lower cap stock market, literally not far from all-time highs. Yes, it's seeing a dip this week. Cyclically, I mean, in the near term, can you call that a bear market in the stock market? Let's measure it, okay? Down to the lows. Okay, it's down about 9%, not even that, okay? So, you know, that's just a correction in my eyes. The stock market is very much has the potential to carry on going higher. As we saw, Nvidia beat their earnings expectations by billions, okay? So the AI bubble's not popping yet, okay? And we'll have a look at what bubbles look like, okay? This is the Nasdaq, okay? This is what a real bubble, a real tech bubble looks like, okay? It comes out from the standard deviation, okay, and goes into a parabolic run up, okay? It was in this channel, yeah, all through the 90s. Then around 1997, 96, 97, broke out, run up, okay? Are we in 96, 97 for the stock market right now? Okay, if you could say, well, the ISM is really low, and also, as I said, indexes and Bitcoin lead, okay? They lead the ISM, okay? Meaning they go up when the ISM is still low, okay? It's when the ISM goes higher, that's when you start to see the risk flow. And if we're going to continue getting rate cuts, if we're going to continue getting a weaker dollar, okay, which the US government needs a weaker dollar and lower rates to refinance their debt, they need to do it. They will do it, okay? So whether we get a bull market in the coming weeks or coming months is probably inevitable, okay? And just one more quick thing as well. We've got the housing market, okay, potentially topped, okay? Very similar to around 2005, yeah? This is the home builders, housing sector index, okay? And it's showing a very similar top. Could be breaking down here. But still early to call it a top before you start breaking down through this 200-week EMA. But I'd say it has, okay? And like I say, that topped in 2005. The stock markets went on to October 2007, okay? So this topped in November 2024, September 2024, roughly. Could we go on till late 2026, as Raoul was saying? It's potential. Don't forget what's happening at the end of 2026, the midterm elections. There's still a lot saying that there's a bull market going on, okay? So I'm not believing that we're going into a cyclical bear market. We had none of the bull market peak indicators for Bitcoin hit, okay? I mean, yeah, people could argue, who's to say we need to see them all? Okay, it would have been good to see some at least. I don't think this market got overheated. The fact that we didn't have an alt season tells you the market didn't get overheated. Okay, we've been battling between fear and greed the whole time. There's been no new real retail interest. Yeah. So I may seem like a perma bull, okay? You might not want to hear this right now. You might be a bear, okay? And you're like, right, well, look, the cycle's over now, okay? I'm just going to get my money out and I'm going to buy the bottom in the end of 2026. But what if 2026 is not a bear market like most crypto 4-year cycle enthusiasts believe? What if time is different? Okay, I know you may have heard that before. Ignore it when they say this time's different. Ignore when they say it's potentially a super cycle. Well, you know, we got caught out in 2021. You know, people saying it's a super cycle. It's a super cycle. Very, very different conditions to 2021. Okay, and 2017. There was mass euphoria in the markets. Okay, 2021, the Fed was starting to hike interest rates. Inflation was extremely high. This is a different environment. Okay, the dollar was very low, and you know it started to rise up as well. Does look like it's starting to rise up now. Let's have a look at the dollar quickly before we go. Right, the DXY. Okay, yeah, it did come down to this trend line. I know, but like I said, the American government need the dollar lower with the lower interest rates to refinance their debt. So does it mean that it breaks this trend? Maybe it doesn't. Maybe we just get it come down here early 2026 and it rises around low. Maybe it wicks down below a little bit. Then it rises up. Then that's your cyclical bear market. Okay. Once the ISM is peaked and starting to roll over. This is a brand new technology super cycle. AI, crypto, seeing adoption, seeing frameworks being built, you know, institutions, huge amounts of capital globally being invested. Okay. This has the chance to be like a late 90s, early 2000 bubble. Okay. But it's not there yet. Okay. Does that mean we can't have a 6-month bear market in between? I mean, Bitcoin, if you really think about it, that Wyckoff distribution pattern that I showed you really began back in July. Okay. Yes, there was a high in October, but that whole pattern started in July. We've really been sideways for the best part of 6 months already. So are we now going down for a couple of months to find the lows of this huge correction? And then we carry on into next year. So we're going to be watching. We're going to be following the charts. We're going to be making sensible decisions. We're not going to let market psychology overpower our thinking and our conviction. So if that sounds good to you, keep watching Prodigal Son Crypto. My name's Chris. And don't forget to give me a like and subscribe. And I'll see you on the next video.